If you're thinking about buying a home, you've probably heard the term private mortgage insurance, or PMI, pop up. But what is PMI, and do you actually need it? Don't worry, I'm here to break it down in simple terms so you can understand exactly how it works and why it might apply to you. What is PMI? PMI is a type of insurance that protects your lender, not you, if you stop making payments on your mortgage. It's typically required if you're putting down less than 20% of the home's purchase price. For example, if you're buying a $300,000 home and only have a 5% down payment, PMI helps the lender feel more secure because they're taking on a bit more risk by loaning you a larger percentage of the home's value. How much does PMI cost? The cost of PMI can vary, but it's usually between 0.5% and 1% of your loan amount annually. That cost is added to your monthly mortgage payment. For example, if you're borrowing $250,000, PMI could cost you around $125 to $250 per month. It's not a huge amount, but it's something to consider when budgeting for your home purchase. Do you need PMI? Here's when PMI typically applies. If you're using a conventional loan, PMI is required if your down payment is less than 20%. If you're using an FHA loan, FHA loans have their own version of mortgage insurance, which is required regardless of your down payment. If you're using a VA or USDA loan, good news. These loans don't require PMI, even with little or no down payment. How can you avoid or remove PMI? The easiest way to avoid PMI is to put down at least 20% of the home's price. But if saving that much isn't realistic, that's okay. There are ways to remove it later. Conventional loans. PMI can usually be removed once you've built 20% equity in your home. This means when you've paid down your loan enough or your home's value has increased. FHA loans. If you have an FHA loan, the mortgage insurance lasts the life of the loan unless you refinance into a conventional loan once you have 20% equity. Why is PMI not always a bad thing? PMI might sound like an extra cost, but it's not always a bad thing. It allows you to buy a home sooner, even if you don't have 20% saved. Instead of waiting years to save for a larger down payment, you can start building equity in your home now. Let's find the right fit for you. Whether PMI applies to you or not depends on your financial situation and the type of loan you choose. That's where I come in. I've partnered with Matthew Scalese at Real Mortgage to make sure you get expert advice and the best loan program for your needs. If you have questions about PMI or anything else, let's chat. Together, we'll make your home buying process smooth, simple, and stress-free. Thanks for watching, and I look forward to helping you find your dream home.